Let's bring in a markets expert, Ashish Kelkar, who's a partner at Precision Investment Services, joining us live from Mumbai to do a quick check of how the markets really panned out in trade today. Ashish, rather a weak and volatile trading session today again. 2017 has not really been a year when the markets have suddenly opened upbeat. I mean, of course, that was expected. Do you think that the weak services PMI data, which has come after demonetization, and the lack of concrete global cues is playing stalemate on the Indian indices?
Yes, definitely. There are various reasons why the markets are not moving up or down. Let's talk on this particular point in two ways or with two different views. First view would be a long-term view. Technical charts, if I refer a technical charts are showing good strength in the longer term. So my view on the index, on the Indian economy is bullish for the long term, and my definition of long term is around 3 to 5 years. Now let's come back to a extreme short term or medium term view. There are two important levels. The first level for the extreme short term is 8,235. Till the time Nifty is below 8235, I am not expecting a very good move in the index, that is particularly Nifty. And on the lower side, 8130, this is a trend decider level. If we see the Nifty breaking this 8130 level, then we can again see Nifty would test around 8050 mark. So investors should be cautious. People who are trading in the markets, there is a probability that they will hit their stop losses, but people who are long-term investors hold with the patience.
Very interesting to note that the long-term investors will hold fort with the investment, but remember the GST is hanging fire in India. From April, the deadline has been shifted to September, and there is no consensus whatsoever, even today at the GST Council meeting, and it looks like September could further be postponed as well. Once the GST regime kicks in, whether it is April, whether it is September, whether it is any other month after that as well, don't you think there would be some sort of a near-term or a short-term impact which will come on to the Indian markets as well, or do you think we have nothing to worry about once the GST is rolled out?
The news is already factored in the prices. Now we know it will be rolled out, but when, particularly when the GST rolls out, that their emotional impact will be seen in the prices for that particular week. I don't think so it will impact with high volatility or high downside or upside immediately.
So there will be not it won't really be much disruptive, you're saying, at all, because the market has already factored that part in. Now, we're moving closer to the earnings that are going to be coming about with the quarter that ended December, really. And we're going to start off the earnings season, of course, with Infosys. How do you see the earnings come out, and what kind of an implication is it going to have on our Indian bourses as well?
Sorry, come back again.
I was saying that we have the earnings season for the month of December, which is a quarter ending for many companies, and we will see the quarter ending results come out with Infosys coming out first. How do you see the numbers really come out, and what kind of an implication would it have on the markets as well once the numbers start coming on for the quarter which ended last December?
Perfect. Now we all know that because of demonetization, majority of the sectors, they will come up with different numbers which were not expected if at all demonetization would have not in this place. So definitely there will be a negative impact as the number starts coming in. Sector wise, I would feel that sector wise the impact would be different. Few sectors which will be impacted more would be FMCG sector, would be IT sector, or another pharma sector. These three sectors, I think these sectors would be in focus when the number starts coming in. So my suggestion to all the viewers would be, if at all you are invested in a particular sector, you should use a strict stop loss for all your positions that you are holding in the markets. As soon as the number starts coming in, look at the charts, take the right decision of following the strict stop losses.
And as far as the dollar is concerned, over the past 14 years, we did not see this happen, and it saw its highest point in the past 14 years, breaking all records last night in trade. Now, I understand that this is because of the fiscal stimulus and the overall acceleration of the US economy. That's one thing. But what kind of implication do the emerging markets now really have with this kind of a currency war going on, where once the dollar was anyway seeing a rally and it's broken records to have a 14-year high now?
Right. I think we had discussed the same. We had a discussion on dollar rise in the last second last or third last discussion that we had on the same channel. I was expecting that yes, this war would continue, and definitely there will be an impact. But if we look at the dollar chart is making consistently higher top, higher bottom, and if I join all the bottoms which it has made, it is taking a perfect support at this trend line, which is helping the dollar to move up further. Now, after this big rally, I am expecting again there would be a drop down in the dollar prices. So when the dollar prices would come down, I am expecting these kind of movements will help the emerging markets as well, because in the trades, I don't know much about the fundamentals. I should be talking on technicals more, but whatever I know, I expect that because of these movements, emerging markets will definitely gain some control over their finances and their economy, and dollar will keep on balancing. The economy, individual economy will keep on balancing because of these up and down movements in the dollar prices.
All right, we leave it at that. Ashish Kelkar, thank you so much for joining us.